Welcome back. Now, the mega trend of energy transition tied to demand for critical minerals as the world pursues green energy is likely to lead up to a pickup in deal making in the mining industry. This, according to Absa. The group's Konosoang Asare-Bediako joins us with greater perspective on this. Good afternoon to you. Thank you so much for your time.
Hi, Nolutando, and thank you for having me.
Thank you for being with us, Konosoang. It's an absolute pleasure to speak to you. I want to speak first maybe about the macros here. We are seeing, we know that the interest rate cycle has certainly peaked, and we're making room for better days, cheaper money. How does that inform a deal-making activity?
So as you can perhaps appreciate, when it comes to deal making, it involves somebody buying another person or possibly coming together. And to do that, most companies need to borrow in order to buy. So if, with what you're saying, the interest rate cycle has peaked, and in fact, we'll start to see interest rates come down, it means that money will just be cheaper. And that's just going to then enable more what we call M&A, which is mergers and acquisitions transactions.
And the commodity cycle, how does that then fit in to what might transpire in the mining sector?
Well, when you say commodity cycle, it depends on which commodities we're speaking to. So if we zoom in on commodities that are essentially going to be used in the energy transition, such as copper. We'll use copper as an example. Copper is quite a hot commodity right now, and prices have actually been increasing consistently over time, just simply because copper is used in many things, electric vehicles, solar panels, etc. So the fact that the price of copper has been increasing does make it difficult for people who are trying to arrive at a price for a certain deal to agree, because you also don't want to overpay as a buyer of assets.
If I think of just the recent BHP Anglo's standoff, if I may, that story was largely a copper play. And I'm wondering, outside of copper, are there any other minerals, metals that are hot right now? Or are we in the copper era?
Look, the reality is, and I love how you put it, standoff, because it really was. It was quite entertaining to watch from the sidelines. The reality is that copper is hot, but there are other minerals such as manganese. So South Africa, fortunately, houses about 70% of the world's manganese. So manganese, again, is used in to fuel the energy transition. It's used in batteries. It's used to an extent in electric vehicles. So whilst the attention hasn't been to other minerals as much as it has been in copper, just because of its diverse use, we think as the energy transition progresses, you'll start to see commodities like manganese become more popular and come into play.
Let us talk about South Africa's investment case when it comes to mining. Like you've mentioned, we house this manganese, of course not as much copper as we'd like, but what is important here, Konosoang, is the fact that we have other domestic issues that put investors off being here. And I'm wondering, as we anticipate a bit of a boom in M&A activity in the mining sector, is it possible that South Africa may not be able to participate in the fullness of it?
It's a very good question. We have our issues, but interestingly, many of these commodities and minerals are located on the African continent. And, we have our issues from political instability as Africa. But if we hone in on South Africa specifically, I believe that what investors look for more than anything is certainty, certainty of policy, certainty around energy supply, certainty around Transnet. So if we can be clear in terms of, so for example, the current elections and the fact that no announcements are being made, that creates a level of uncertainty. Power supply, what are the plans around Eskom? That's uncertainty. Transnet, what's happening over there. So if we as South Africa and our policymaker can communicate policies, can communicate plans and stick to them, that creates certainty for investors. And I believe once we are able to create a level of certainty, we'll see an uptick in mining deals. Because if you think about it, when you invest in a mining venture specifically, you're putting your money in the country for, 20 years plus. So yeah, certainty is critical.
With that said, when we think of the possible deals that could emerge, what we have seen right now is what I will call the big boys with their big balance sheets. They're the ones in conversations here. But could we see some of the smaller, mid-sized mines consolidating as well?
Yes.
What would that look like?
Absolutely. So here in South Africa, we have gold, we have platinum, and consolidation has been a story for a lot of these commodities. So, for example, in platinum, you saw Sibanye acquire Lonmin. And there've been actually conversations between a lot of the platinum players, just given the pressure on the platinum price, perhaps not for consolidation as such, but for cooperation. So this is where they share resources. So there's a shared, kind of a shared services and shared resources arrangement. So yes, definitely consolidation. But I love how the mining executives have actually extended that from consolidation, because consolidation is quite difficult. You're bringing together two companies, two cultures, but cooperation means that you have the benefits almost of consolidation with the shared infrastructure and shared costs without the complexity of actually doing a deal.
Well, sounds like exciting times are ahead. Thank you for talking to us about this one. Thank you so much, Konosoang. That's Konosoang Asare-Bediako, investment banker at Absa CIB.